Good morning, traders and investors. My name is Roger Scott. I'm the senior strategist at WealthPress. Today is Thursday. It's about 8:29 in the morning, and we're going to get what I consider the biggest report of the week in about a minute. We've got the jobless claims coming, and let's kind of deal with this in real time. So the expectations is 760,000. The market, and all of this is happening before the opening bell. I'm going to show you how I use data before the opening bell to take advantage of the market after the opening bell, which is how the pros do it. We do it so that we don't react. We make decisions before the market gets going so our emotions don't get trapped into all of this back and forth. That way we can just execute when markets are open. So the markets are up a little bit. We're near all-time highs again. And boy, oh boy, we're stretched out again. And I'm not going to get into it. You guys all know we're like at a rubber band level like this. S&P's up about 15 points. The Dow's up about 82. There's nothing really out of whack here. Usually, I will pay attention if like the S&P's up 15 points, NASDAQ is down, but it's not. We're not seeing any of that. And I wanted to show you the jobless claims. Now, I specifically wanted to do this report a little later because I wanted to see how this impacts the market, and we'll be kind of reviewing this over the next 10 minutes. But again, what happened was this: about a month ago, the numbers came out at about 965,000. We started going up towards 1 million claims a week. And this data is only as of 2/6, so it's only about 5 days old, which is why it's so important. So the numbers started coming down. Then it was 900,000. Then it was like 848,000. And now it looks like we're back into the 700s. So as long as we're at the consensus, as long as we're below 779, I hope we're below the 4-week moving average, we should be okay. If the number starts going back up to the high 800s, then it'll tell us that the vaccine is not being impactful on people in the workforce because or there's just not any jobs available. Either way, seeing this number run up is not a good idea. So the expectations is 760,000. Let's see what the number comes out. Drum roll. Aha, here we go. Ooh, 793,000. Worse than the expectation. So consensus 760,000, actual number 793,000. Now, it's a hell of a lot better and a whole of a lot better. I don't know if that's the actual phase. Whole of a lot better. It's a hell of a lot better. I'll stay with that one. Than the 4-week moving average. So it's good. But again, we're in the 800,000s. Folks, we've been at these levels now for close to a year. And this is not happiness. Let's see how the market is reacting. Not too much, or if anything. Again, number is not significant enough. But again, it looks like we're making headways. We're below the 4-week moving average. But again, we're above our consensus level. And again, we've been hovering between 750 and 965,000 now for a few months. And that number is not pretty. It's not good for the market. So jobless claims are looking better, but I wouldn't be holding my breath. We may be in this position for, let's see, we're right now in February, March, April, probably till the end of the next quarter, which means the stock market is going to need a lot of stimulus to continue making higher prices because we can't sustain these levels. I mean, look at this. This is amazing. I mean, look at this. We just keep going higher and higher. Meanwhile, momentum levels can't sustain. We're at all-time highs. I have to keep extending this. Yesterday we made all-time highs, and momentum levels couldn't even get to 67. Look at this. We are 356. Now we're at 391. But look at momentum levels here. Strong divergence. Let's talk about global economy. President Biden held his first conversation with Chinese leader. No major change. I'm not seeing any major changes with Biden. This guy's not going to make drastic changes. This is not that kind of president. Many markets in Asia are closed for the Lunar New Year's and other holidays, so you're going to see less activity in U.S. because remember, everything goes around in a circle. U.S. markets key off Asian markets, and Asian markets I can't speak this morning. They key off European markets, and European markets key off U.S. markets. It's a round circle, and they all key off of each other. U.S. officials have signaled Washington will keep in its place export restrictions on tech and tariffs imposed by previous administration. Thank God for small favors. That's good. That's good right now. We need to keep China under our thumb. We need to do that for quite some time. Markets have been lifted by surprisingly good company earnings reports. Don't get too excited. They've been beaten down the last 3 quarters. But so far, we're now in the second part of the S&P 500 earnings. We've had about 350 reports. So far, the numbers are substantially better than expected on both earnings and revenue. And next quarter, we're actually expecting a positive quarter. But again, the numbers have been beaten down. So the fact that they're outperforming estimates is just not that significant. U.S. government report released Wednesday showed that inflation's remained tame last month, but I think we're going to see some inflationary pressure. I really do. Labor Department said Wednesday that U.S. consumer prices rose 0.3% in January, led by a surge in energy. I still think energy has a long ways to go. We're still in recovery mode for energy. Investors are watching inflation metrics more closely as Democrats in Congress prepare to inject $1.9 trillion of stimulus into the economy, which is why we're seeing the S&P so high and momentum levels can't get up there because we're literally prodding this market higher and higher and higher. Americans, U.S. businesses are starting to reopen and millions of Americans are now vaccinated. Yeah, I don't know about that. Mostly senior citizens that are out of the workplace. Most working Americans have not been vaccinated unless they work for, unless they're in the medical field and first response medical field. So it's not really that accurate that millions of Americans are now vaccinated. If you look at which Americans are vaccinated, you will see that most of them are not impacting towards the jobless numbers, which is why unemployment numbers are still rising, or not rising, but not moving lower, which is really the key here. So where were we here? So far, much of the extra money being channeled into the economies appear to be lodging in financial markets. Very, 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 very true. So again, no major report today. The only major report is jobless claims, and that is actually the big report for the week. This is the first week, aside from earnings, obviously, this is the first week that we don't have a lot of Fed data. Tomorrow, we've got consumer sentiment, which is going to reflect on retail sales, and the GDP, which makes up about 75 to 80% of our economy. So keep your eye on this number. It's going to be relevant, and I'll discuss it tomorrow before the opening bell. But again, CPI CPI is telling us that inflation is intact or under control, if you will. But I wouldn't hold. I'm looking at prices of lumber, commodities. We're going to have some inflation. There's no question about that, folks. We're going to see some inflation. Maybe not across the board, which is what's causing a lot of analysts to say we don't have inflation. But if you look at it, if you look at inflation from like technology, commodities, home building products, it's here. There is a lot of inflation. No, there's not a lot of inflation in certain categories, but there's a lot of inflation in others. So it's kind of balancing out for now, for the time being. Looking at individual sectors, look, this is the S&P 500. I told you guys that Viacom, which was in 8th place last time we looked. Let's go back a week. Where is Viacom? Viacom. Oh, Viacom was actually 2nd place last week. Let's go a week back. Go 2 weeks back. Let's go a week before that. Yeah. Let's go to Viacom. I don't see Viacom here. Do you see No, Viacom is on here. What am I doing? It is here. So Viacom has been on here for a while. I must be thinking about a different stock. But again, I like this Viacom. I like this Oxy Petroleum. I like this FANG, but I wouldn't be going into traditional energy stocks. Retail is still leading Nordstrom's, Kohl's, Coach. I like this Viacom. I still like this Viacom. Another stock that's making headways that was not making headways on our list is MGM. And I talked about this stock a few weeks ago. MGM was not on our list. Occidental Petroleum was not on our list. This SVB Financial was not on our list. Another stock that's moving back up, Under Armour, Twitter. So keep your eye on Twitter, Under Armour, MGM Resorts, and Viacom. Those are the 4 stocks I would be keeping my eye on. Viacom, MGM, SIVB, ticker symbol, and Under Armour, ticker symbol UAA. Now, as far as the NASDAQ, that's the S&P. As far as the NASDAQ 100, things haven't changed here. Moderna is still leading. Baidu and Meli, remember, European companies or international companies with tech exposure. Baidu, Mercolibre, we talked about that. Now, the stocks that are making headlines here, NTAP, that's a stock that hasn't been on here. Ulta is coming up here, and Workday. So you've got Workday, because it was all semiconductors. Now you're seeing PayPal come up again, Expedia. So look for stocks in the top spots that are not semiconductors. So for example, you've got Workday, you've got NetEase, you've got Ulta, you've got NetApp or NTAP, PayPal. I like PayPal right now. I like Expedia. If I was to focus on two stocks, I would be focusing on PayPal and Expedia, because Expedia is making a comeback, and that goes in line with MGM making a comeback, because people are starting to look outside of the world. So MGM on this sector, and on the NASDAQ 100, we got Expedia. I talked to a real estate agent. She's telling me people are starting to make plans to go to Mexico, and it looks like people are starting to look outside. Now, again, notice that I'm doing this analysis at 8:40 Eastern time, and the market's not going to open for another 50 minutes. I'm trying to figure out, I'm showing you actually, I'm not trying to figure out, I'm showing you my analysis for the market and how I approach it for things that are going to happen after the open. So I'm doing pre-market analysis, so that when the market opens, I already know what's going on. So here's what you need to know. America's #1 pre-market trader and myself are exposing something earth-shattering about the stock market. This is earth-shattering. You've got to check this out. It all started with an undercover recording, and now it has turned into something so much larger. Things have a way of taking on a life of their own. Some are starting to say we've hacked the market. But all the money is made before the market even opens. Remember, Asia, Europe, they all dictate what the US market's going to do. You just got to know where to look. This new pre-market strategy has already handed out, get this, 20 wins in the past 22 trades. Can you imagine taking 11 trades and 10 are winners, taking 22 trades and 20 are winners? That's like a 95%, 96% success rate. That's crazy accurate. Posting winner after winner after winner since November. December, January, February, 3 months. Folks, you've got to get in on this. Had you followed along, you'd have tripled your money. Man, I'm getting excited about this. Click on the link below to watch this video that we put together on this mysterious new market hack. You've got to check it out. And make sure you like this video, subscribe to our channel if you're watching it on YouTube, stay ahead of the market by being the first to be notified when we post our next video. Most importantly, have a great day, stay out of trouble, and follow the link below. You've got to check out this #1 pre-market trader and myself. We've got an earth-shattering discovery that we want to share with you. Have a great day, guys. Bye.